In this video, we're going to take a look at a Keltner channel cycle trading strat for stocks, crypto, forex, all sorts of stuff like that. I'm going to cover how it works, the settings for the indicators, entries and exits for longs and shorts, and make sure you all watch to the end to check out the data from our 100 sample backtest so you can see how it performs in live markets. So let's begin. To start off, this is going to take two Keltner channels, and it's going to be very similar to our other cycle strategies that we've covered on this channel and TQFM in general. However, this is a much more simplified version, even to Hurst. Very simplified cycle trading strategy. So you're going to take two Keltner channels. The first Keltner channel is the big one, the black one. You're going to want to set it at 100 length with a multiplier of 1.5. And I like to color it black and put it on top, just so I can see when the white one is disappearing behind it or emerging from behind that. In the faster Keltner channel, we're going to set to 20, and that's a 1:5 cycle ratio. Similarly, with a 1.5 multiplier. The idea behind this strategy is you're going to trade the cycles, the short cycles, inside of the long cycles. And to do this, you're simply going to look for extensions for the longer cycle to continue to start an uptrend. The shorter cycle has to begin breaking out from behind it. That's the entire logic behind it. And for this to begin to reverse, it has to first hide behind the black one. See, it has to hide behind it, and then it comes out from above it. It doesn't get all the way outside of it without first peeking out from behind it. And it doesn't get all the way back in it without first sticking back inside of it. It sounds simple, but cycling can be an effective method for trading. So the short entries, we have one here. The fast band starts to peek out from behind the slow band and take a close. Your stop is going to go to the top of the slow band, and it's not going to move. Your target is going to be a 2-to-1 risk-to-reward ratio, or you will exit when momentum fades, when the band peeks back behind the black one completely, and that will enter a trade on the upside. A long trade is going to function similarly, where the fast band starts to peek out from behind the slow one, and you're going to buy a close. Your stop's going to be at the bottom of the band, and you're going to look for a 2-to-1 risk-to-reward ratio. Now that you know how it works, how the indicators are set up, and the entries and the exits, I'm going to go ahead and begin backtesting. I do love the trade cyclers. We started with $5,000. We took 100 trades. We had a 46% winning rate. Our average win was $18.94. Our average loss was $8.62 for a 2.198 risk-to-reward ratio. Some of the losses were trailed off, and that really helped us get a little bit better than that 2-to-1 we were looking for. We had a total winnings of $405.90, or an 8% return on capital in our 41-day backtest. In conclusion, this strategy overperformed my expectations, and this can teach us a lot about how the market functions and cycles of momentum. And this can help us make better decisions as traders and investors. If you enjoyed this video, make sure to check out all my other ones. They're similar to this, and if you like this one, you'll like those too. And make sure to subscribe to my channel for all sorts of new videos along similar lines. Thank you. You have a great night.